who is Charlie Munger? He's actually an American billionaire investor, and he was actually a former real estate attorney before he becomes an investor. So currently he's the vice chairman of Berkshire Hathaway, and he's also best known as Buffett's closest partner and right-hand man. Let's look at what is his investing strategies. So he prefers to invest in high-quality business with superior competitive advantages, which is known as an economic moat. Charlie Munger likes to invest in business that value long-term growth. That means he likes businesses that focus on long-term growth and where the business owners wants to grow the company in long term to make profit instead of the pump and dump scheme.
People know nothing about stocks, being advised by stockbrokers who know even less.
We'll look at his historical performance where we find out what makes Charlie Munger a very famous value investor. He actually generated 19.8% of average annual return in his own investment company before he joins Berkshire between 1962 to 1975. As it was shown here, between this period, he generated 19.8%, whereas Dow Jones, S&P 500, they only generated roughly about 5%. So this is why it makes Charlie Munger famous. And currently in his portfolio, his top holding stock is actually Bank of America, which takes up about 42.5% of his entire portfolio. Charlie Munger actually did not purchase any stocks in 2022, but he purchased stocks in Alibaba, where he purchased it for 3 times in 2021. And he has created headlines when he made this purchase. It's because when Alibaba was price dropping, Charlie Munger kept on purchasing the stock, but he has to sold 50% of the stock when the price continues to drop. So currently, he has 14.58% of BABA in his portfolio. Alibaba is a Chinese multinational technology company where it's the world's largest online and mobile e-commerce company. So it operates China's online marketplace, which is Taobao, a customer-to-customer online platform to sell products and also merchandise. And Tmall is from business to customer online platform. Okay, so right now we'll look at some of the numbers. So these criteria are actually a quick screening about the company, but it does not mean that BABA is a good company. But it's just for you to find out like why Munger decided to purchase Alibaba for 3 times in 2021. The revenue is actually increasing year on year, which looks very good. But when we look at its earnings per share, we notice that even though earnings per share is keep on increasing, but in 2022, there was a huge drop. So when we investigate into their annual report, we found out that actually during this year, BABA had a drop in their interest income and also their investment income, which is why their earnings dropped drastically in 2022. So currently, the PE ratio for Alibaba is about 37.85, which is considered quite expensive. However, we should take note that during the time when Munger purchased BABA, it was during here, and we see that it's actually somewhere below 30, and it also went somewhere around 20 during that period. Next, we look at debt to equity ratio. So based on value investing methodology, we wanted the debt to equity ratio less than 0.5. So what does this mean? This means that for every $100 of the equity, we want the company to take less than $50 of the debt. So for here, BABA actually has a debt to equity ratio which is about 0.19, which is considered lower than 0.5. So this is a quick analysis about the stock that Munger purchased in 2021.